Welcome to our Forex and CFD Market Focus Report for Tuesday, September 24, 2013. Let's go ahead and take a look at our calendar for today. Earlier today we focused on some German Ifo data. We see the business climate came in a little bit weaker than expected, but an improvement from our last print. We saw the current assessment sub-index move lower to 111.4, but we saw a nice increase in the IFO expectations index to 104.2. This was above expectations, and this also contributed to a rally in the euro to intraday highs. We saw an improvement in BBA loans for house purchases in the UK. This number right here actually indicates that mortgage activity expanded most recently. Perhaps some home buyers in the UK are trying to refinance and purchase properties before UK interest rates continue to move higher. In the North American session today, we're going to see some Canadian retail sales data. Those are expected to come in right around 0.5%. And then, of course, in the U.S., we're going to get some Case-Shiller house price index data. These will be interesting to see if any sort of traction is evident in the U.S. housing sector. On our Fed docket today, we have Cleveland Fed's Pianalto is going to speak. We also have Esther George out of the Kansas City Fed. She will be speaking later today. Her remarks are always interesting because she is usually dissenting with the FOMC, and in fact in last week's FOMC vote to not taper, Esther George dissented. We're also going to see in the U.S. consumer confidence numbers and the Richmond Fed manufacturing index. Later in Tuesday's session, getting into Wednesday's session, we're going to see some New Zealand trade balance data. In a few moments, we're going to take a look at some weakness in the New Zealand dollar, and the trade balance data will be quite important to watch as a result. Let's go ahead and look at trading activity. We can see over here the euro complex is mixed. Recently, up until a couple of hours ago, the euro was outperforming the crowd. That, of course, has changed, and now we see the Japanese yen is outperforming all of its peers and moving to intraday highs. US dollar is mixed in activity, and our weakest performer today is in fact the New Zealand dollar. Before we focus on some FX rates, let's go ahead and take a look at some CFDs and some other asset classes. Here we have a daily chart of gold against the US dollar. We can see that gold is weaker on the day and has traded as low as the 1313 handle. This represents 3 consecutive off days for gold. We are keeping an eye on physical demand out of China for gold, heading into the Golden Week holiday from the 1st of October. Much the same story here in silver against the US dollar today. This is a daily chart indicating that silver traded as low as 21.397. Silver is of course lower for the 3rd consecutive daily trading session. Moving over to the energy complex here, we can take a look at Brent crude, where the selling pressure has been more dramatic as of late. Today's intraday low in Brent crude is 107.28, and as we scroll back on our chart here, we're going to go ahead and take a look. We can see maybe some demand from last week, but once we scroll back further, we can see that Brent crude could definitely move below into the 106 handle soon, and then maybe down to 105. In the Brent crude market, we saw some supply capacity come back online from Nigeria. That has increased that country's daily output to about 2.4 million barrels. So that is keeping a lid on prices. And the United Nations Security Council continues to work on language for the disarmament of Syria. That is also keeping on a lid on prices. Finally, let's take a look at West Texas Intermediate. Much like Brent crude, West Texas Intermediate is trading at multi-week lows here, trading as low as 102 spot 81 earlier today. We're going to see if this this asset can remain above the psychologically important 100 figure. It certainly has some room to move lower. One thing that is working against the price moving higher is the fact that production in Texas was recently at 32-year highs. So we will receive this week some EIA inventories data. They are expected to show that stockpiles in the U.S. are continuing to move drastically lower. Let's go ahead and take a look at some individual activity. Here we have the U.S. dollar stronger on the day across the board. There's a little bit of an upward bias and trend here on an intraday basis for the dollar. As mentioned, we're going to take a look at remarks from Pianalto and also from George, and then take a look at some consumer confidence data, some Richmond Fed manufacturing numbers, and we're also going to keep an eye on Case-Shiller house price data. There were some interesting remarks from the Dallas Fed President Fisher last night. He basically said the White House has botched the Bernanke succession plan, and he said he supports Yellen's candidacy even if she is wrong on policy. Finally, Fisher made it known that the deliberations at the FOMC meeting last week were quite heated as whether or not to taper. He suggested that he favored a taper, but of course he was not a dissenter in policy. New York Fed's Dudley spoke yesterday and reiterated that monetary policy needs to remain accommodative. We can surmise that he continues to support quantitative easing policies. And then, of course, we had the Atlanta Fed President Lockhart speak yesterday. He said he needs to see more dynamic growth in the U.S. You can see the euro, even though it has pulled back, is still a nice intraday upward trend here against all other peers. The German Ifo numbers contributing to the euro's intraday high. Also, Spanish Prime Minister Rajoy today indicated that Spanish banks will likely not need an extension of bailout facilities. That is also keeping the euro supported today. Relatively quiet session in Japan. We see a nice intraday move higher, so a nice trending bias here, higher in the Japanese yen. Traders, of course, are on alert for anything that might suggest carry trades are back in vogue, and we remain very alert to any remarks from Bank of Japan officials regarding the yen or the trajectory of monetary policy in Japan. Looking at the British pound, we see no intraday bias here. Nothing is emerging yet. The pound is a little bit underwater across the board. Perhaps some recent profit taking is settling in. We saw the BBA data earlier, but nothing of drastic note there. Swiss franc, we see a little bit of an upward intraday trend bias for the Swiss franc. In just a minute, we're going to take a look at the impact of remarks we heard earlier today from Swiss National Bank officials who pledged to keep Euro Swiss higher. We'll go ahead and take a look at that cross rate. Basically, we had some verbal intervention today from the SNB. They're looking to talk down recent strength in the Swiss franc, at least on the Euro-Swiss cross. Australian dollar is underwater today. We have a nice downward bias, an intraday trend lower in the A dollar. That is perhaps reflective of some profit taking on the cross rates given the strength in the Japanese yen. The Canadian dollar here, we see a nice move higher, so we see a divergence between the Australian dollar and the Canadian dollar. Canadian dollar is bouncing back nicely today. We're going to take a look at some Canadian data later in the North American session. Canadian dollar took some cues from BlackBerry. Yesterday they announced a $4.7 billion buyout by a Canadian group, so no real major foreign exchange consequences there of that M&A activity. Canadian interest rate expectations have actually moved lower over the past week. We now expect about 5 basis points of tightening between now and July 2014. New Zealand dollar is our major loser today, a huge downward bias intraday trend here for the loonie. No major significant data on tap here, so we can conclude that this is simply some profit taking given its recent performance here, its outperformance against the market. Also the stronger yen probably leading to an unwinding of some long New Zealand dollar, Japanese yen carry trades. Let's go ahead and take a look at 4 cross rates. This is the Australian dollar against the Japanese yen. This is a daily chart. We can see here that the Australian dollar moved lower and tested almost perfectly this red horizontal support line coming in at 92.55. That coincides with a major 23.6% retracement level, a Fibonacci retracement level for this cross rate. Any moves below this major support line, we're going to see a possible test of 92.22 down to 91.70 as we can see here, followed by a possible move lower to this 91.38. That would be our next major downside price objective in the Aussie yen cross rate. Moving over to the New Zealand dollar against the US dollar, we can see that the New Zealand dollar tested a nice support level here coming in at 82.66. This is a Fibonacci retracement level, this red horizontal line, coming in at 23.6%. Any move lower, we would anticipate a possible test of the 82.36 area, followed by a possible test of the 81.74 area. We would expect some short covering down around here. Finally, our next major support line on the downside comes in around 81.62 for Kiwi against the US dollar on this daily chart. We would not be overstating the case if we said the British pound has outperformed the Canadian dollar recently. If you subscribe to the theory of gravity, you might expect the Canadian dollar to appreciate sometime soon against the pound. We can see the intraday low is right around this support coming in on this moving average, this blue moving average line here. We move below this 23.6 retracement area coming in at 164.57. Any move lower in the pound C dollar cross rate, we're going to see a possible test of 164.02, followed by a possible move lower to the 163.58 area, and then we would have some additional major support coming in on a much wider range down around 163.16. So we're about 130, 140 pips away from this area here now, but this is a key level to watch. Again, 163.16. Final cross rate that we want to take a look at today is the euro against the Swiss franc. As we mentioned earlier, we saw some verbal intervention from the Swiss National Bank today. You can see that the recent support going back a couple months comes in right around this 122.60 to 122.75 area here. That's this red horizontal line. That in fact was right around yesterday's intraday low. And then of course we saw the Swiss National Bank talking the cross rate higher earlier today through that verbal intervention that we mentioned. So it's no surprise that we saw the Euro-Swiss rate move back above the 123 figure. On the upside here, of course, Swiss National Bank would like to see a move back, of course, to the 123.10 area, which is this horizontal line here, and then moving higher to test perhaps the 123.45 area up around here. We thank you very much for tuning in to our Forex and CFD market focus video for today.